Welcome to The Explainer. Today we're going to unpack the latest from the global auto giant, Tata Motors. They've just been through a quarter that was, well, a perfect storm of trade war challenges and a really ambitious pivot towards electric vehicle. So if you just looked at the headline number, you'd see this, a 2.5% drop in revenue. You might think, okay, not great, but not a total disaster, right? But trust me, that little number is hiding a much more complex story of major headwinds, some incredible resilience, and a few, frankly, brilliant strategic moves. In fact, one of the company's own executives called the quarter engrossing. Now, engrossing isn't a word you typically hear on an earnings call, is it? It makes you lean in a little. So what exactly made this quarter so compelling? Let's dive in and find out. Here's how we're going to break it all down for you. First, we'll look at the huge tariff storm that slammed the company's Jaguar Land Rover division. Then we'll see how its business back home in India actually acted as a powerful counterbalance. And finally, we'll look at the road ahead for the company.
Okay, so the single biggest story this quarter, and our first major stop, was the absolutely massive hit that new U.S. tariffs took on the iconic Jaguar Land Rover business.
JLR's chief financial officer really put it bluntly. He said the company was facing challenges of a scale and a speed that, you just can't absorb. This wasn't some little bump in the road. He's describing a sudden, massive shock to their whole system. And this table here breaks down exactly where those profits went. Now, you can see a few things going against them, but there is one line item that tells pretty much the whole story. See that? The incremental U.S. tariff. That wasn't just another headwind. It was a full-blown hurricane, a 254 million pound hit straight to the bottom line. And that came directly from U.S. tariffs on their cars jumping from just 2.5% all the way up to 27.5%. Just imagine your costs multiplying by more than 10 times almost overnight. That is a staggering hit to take in just 3 months. But, while JLR was getting hammered by that international storm, a totally different story was playing out in Tata's home market of India. And this is where we really start to see the resilience and the smart strategy that pretty much saved the quarter. This really is a tale of two very different businesses living inside one company. On one side, you've got JLR, forced to play defense against these huge global pressures. But on the other, the India business was all offense, finding and seizing massive opportunities right at home. Let's take their commercial vehicle business, for example. We're talking trucks, vans, the real workhorses. Even with the overall market being completely flat, Tata actually grew its market share by 50 basis points. Now that's half a percentage point, which might not sound like much, but it was enough to seriously boost their profitability. It's a classic case of outperforming the competition right when it matters most. All right, now for the passenger cars. This is where it gets really fun. In the electric vehicle space, they made a strategic move so bold that the division's managing director called it nothing short of a blockbuster. And let me tell you, the results absolutely back that up. So what was this blockbuster move? Simple, but genius. They offered a lifetime warranty on the EV batteries, which directly attacked the #1 fear for almost every potential EV buyer. And the result? It was immediate, a 55% surge in EV bookings. This is so key because it proves they don't just sell cars, they really get their customers' anxieties and know exactly how to solve them. And if you needed any more proof that their EV momentum is real, just look at this. When they launched their new Harrier EV, they got a staggering 10,000 bookings on day one. That's not just good. That's a clear signal of massive, pent-up demand just waiting to be unlocked. So, you've got these immense challenges on one side, huge opportunities on the other. What's the plan? How do they move forward? Well, it's actually a very clear two-pronged strategy for both recovery and for growth.
For Jaguar Land Rover, the response is this massive internal transformation program. They've launched 14 distinct missions, as they call them. Each one is designed to cut costs, drive efficiency, and claw back 1.4 billion pounds in value. The whole idea is to make the business leaner and more resilient to handle those external shocks.
And meanwhile, back in India, the plan is simple. Double down on what's working so well.
They are pushing the EV offensive hard. They're launching new models like the Sierra EV, and they've set this incredibly aggressive target to make electric vehicles 17% of their total sales in the very next quarter.
The company's group CFO really summed up the entire mindset perfectly. He said, "In a world that's confusing and unpredictable, the focus has to be internal. It's all about flawless execution of the strategies that they can actually control."
So what we're left with is this fascinating picture of a global giant fighting on two completely different fronts. One is a battle of defense, and the other is all-out offense. The big question now is whether this incredibly focused, two-pronged strategy will be enough to turn today's powerful headwinds into tomorrow's tailwinds.
If you like the content, please like and subscribe. Comment on Finance Seco India.